Cryptocurrency has often been characterized as the Wild West of finance. It's unregulated, volatile, and gives people a chance to strike gold or bottom out. The whole ecosystem is a whirlwind to keep up with, a finance roller coaster with insane highs and lows. But once you get off the ride and listen to the commentary, lately you're going to hear just one thing: crypto is dead. Or is it? Hi, my name is Neera and I'm a financial analyst. I talk about personal finance and investments and teach you how to make money and grow it exponentially. If you're interested in this topic, consider subscribing, as this will help the channel grow and impact more people. Today we're going to look at a staple of the e-finance world, cryptocurrency. Decentralized funds have been the talk of the internet, especially in the last decade, experiencing highs and lows unlike anything we've ever seen. Crypto is the everyman's investment, but it's also highly specialized with a market that runs differently than traditional stocks and bonds. While it's almost impossible to ignore the hype and buzz around this asset class, it's become more difficult following the news lately than ever before. With the fall of FTX, people are more skittish and concerned about their investments. And like rats on a sinking ship, there's only one way out, and it's complete and total abandonment. For many, especially those watching from the outside, it might seem obvious. They claim to have seen the writing on the wall, say that it was only a matter of time, and say that crypto was always going to go like this. However, those who know what crypto's like can see things differently. The fall of FTX has snaked its way through the crypto world, creating doubt and affecting other coins like the Bitcoins and Ethereum giants. We're going to look at the fate of the markets and what could come out the other side. It could be a financial boon, a grave of forgotten tokens, or something else altogether. Make sure you watch to the end to get the whole picture, because there's so much more to it than you'd think. While cryptocurrency can seem daunting to some, it's still a relatively new concept with potential benefits. It's marked by a few significant points that make it different from traditional forms of money and investments. The whole ecosystem of cryptocurrency is decentralized. This means they aren't beholden to government policy changes or changes in a government or country's central bank. More so, they aren't affected by inflation or deflation. Moreover, no single government or governing body oversees it, and it's rendered transparently by blockchain technology. In addition, investors aren't subject to international transaction costs or exchange rates. Every asset class has advantages depending on the kind of investments you want to make. Therefore, investing with your risk profile and your profile structure at the forefront of your mind is best. For Bitcoin and crypto in particular, these include: number one, high risk and volatility. For some, the volatility of cryptocurrency makes it desirable. To many, the risk of genuinely high volatility is just too much. It makes it difficult to predict the behavior of the market, whether it be rises or losses. The price can go up constantly, then dip significantly, making it difficult to ride out long-term volatility, resulting in gains. When you can't predict a stable pattern, it gets trickier to time your exit around an optimum return. Number two, difficulty exchanging assets. As cryptocurrencies are often developed independently, it can be challenging to exchange one for the other, even with the rapid development of mass platforms like Binance. Even with the inclusion of new media for that purpose on the market, these exchanges haven't simply become easier. It's a process. Number three, unregulated market. Similar to volatility, the lack of regulation can be seen as good or bad, depending on the investor. Cryptocurrency's decentralized nature can bring risk. No restriction makes an asset riskier to invest in, as market users might seek to exploit the lack of oversight. This differs from stocks and bonds because these markets are subject to considerable regulation, making them a safer place to grow wealth, where investors feel confident they won't fall victim to a scam. To be clear, cryptocurrency is not the scam here, but the lack of regulation does give it a fair measure of uncertainty. Number four, cybersecurity risks. All kinds of crypto exchanges and assets can be a target for cyber hacking. It's such a new technology compared to other asset classes that it attracts cyber criminals looking to exploit the possible vulnerabilities. Cryptocurrencies can be challenging to hack, but cyber criminals are intelligent and highly motivated. This year alone, hackers stole $1.4 billion using crypto. Before we get into the discussion about future of crypto, let's rewind back to the events that led to the crypto crash. In early November, FTX, the world's fourth largest cryptocurrency exchange, experienced a breakneck spiral leading to its collapse. Its CEO and leader, Sam Bankman-Fried, resigned, and FTX, alongside dozens of related entities, filed for bankruptcy. The stunning collapse raised many questions about the future of the exchange and the crypto industry as a whole. When FTX filed for bankruptcy, it was because it couldn't meet the billions of dollars in withdrawal when investors learned the company was having liquidity issues after misusing clients' assets. The value of FTX fell to zero, and the company was put under investigation for lending clients' funds to its sister firm, Alameda Research, for using in highly speculative trades. There's a fair amount of disillusionment as we head into what some believe as a crypto winter. It happens regularly as part of the market volatility, but somehow this one feels different. FTX's bankruptcy and crash looks to some like a blend of the 2008 crash and Enron mixed in one. The difference is it was less systemic and no taxpayer bailouts are on the way. This isn't the first time a crypto exchange has failed, but it's a bit different. About 1 million investors were directly impacted by the FTX scandal, with losses around the $1 billion mark. However, that's not where the downfall ends. Even those not invested in FTX could feel the fallout. When cryptocurrencies and exchanges were exposed to FTX's primary token, they began to suffer due to falling prices and confidence. FTT, FTX's primary token mentioned before, was utilized on FTX to reduce trading fees for several other utilities on the platform, and its performance suffered losses in return. As a result, giants like Bitcoin and Ethereum began to drop in response as confidence spiraled. With the bankruptcy of FTX, one of the world's largest crypto exchanges, Bitcoin's price has fallen again, just over 17,000 versus last year's all-time high of 66,000. At the time of recording this video, the current price of Bitcoin is 17.1 thousand, and early today it was just peaking over 16.9 thousand, meaning it has increased several hundred in a single day. That being said, looking at the year to date, we're at an astounding 65% drop. Bitcoin is just one of many cryptocurrencies available on the markets. Still, people seem to forget that the mood around Bitcoin's performance often links to the general attitude of how crypto is doing. Since 2010, new crypto hedge fund launches have highly correlated with the rise in Bitcoin's price. And this rule follows into 2022. With low Bitcoin turnouts, 2022 has seen the lowest new crypto hedge funds entering the market in the last 5 years. Yet, more than 300 crypto hedge funds are still chugging along across the world. One question that keeps popping up online is, can crypto be shut down? In short, no. It's a public ledger and form of technology, and thus can't really be stopped in a traditional sense. Over time, governments like the US and China have attempted to regulate it to a certain degree. While this regulation may make it safer and more attractive to some, it may also mean that crypto loses some of its appeals. To many, the decentralized nature of crypto is the main appeal. Just a quick internet search on "Is crypto dead?" will show you that the internet has claimed Bitcoin's death more than 400 times, 24 this year alone. 2017 was the first spike of deaths as Bitcoin climbed to its then record high of 20,000. It quickly shed about 45% of its value, falling below 11,000 just 5 days later. The internet has claimed Bitcoin has died so many times that every small change in the already volatile markets marks the end of the crypto boom. Over 400 instances of websites claiming crypto is dead since its inception all so far have been untrue. After the bitter feuds, regulatory crackdowns, billions lost, and speculative manias, this popular asset continued to show its tenacity. In short, it refused to die, no matter what the internet thought at the time. How is this time any different? In reality, crypto is far from dead. It doesn't look like it can, would, or should die in a typical sense, or at least anytime soon. It all comes down to the investor and their desire for high-risk investment. Cryptocurrency has always had high levels of volatility, and during these times, Bitcoin at an all-time low means fewer people are involved overall, and new ideas can flourish. This is just another meltdown. There have been others in the past, and they've always come back more substantial and robust for it. Why would this be any different? Crypto isn't a monolith. Even without the FTX exchange, several others will crop up and take its place, like a hydra to grow where one is cut. The latest washout shouldn't be called a panic. It's not a sudden drop or a short-term fluctuation. It's more like a months-long grind, with prices shifting further away from the high watermark in early November 2021. Lower costs and amidst mixed financial messaging have created an opportunity for crypto investors and businesses to reassess their strategy. This downtime is a perfect either for making plans for a new growth phase or, of course, to cut losses and get out while they still can. Crypto is volatile, and that's the point of it. However, that doesn't bode well when investors are already skittish. The current hope within the industry is that a new year might bring a fresh start and even some clarity for the market. As long as they make it through 2022, this might be possible, but even a month in crypto time can be an eternity. If you like this video, leave us a thumbs up, subscribe to the channel, and make sure you turn on notifications to never miss out. If there's anything else you'd like me to cover, leave it in the comments below and I'll check it out. I want to keep you as up to date and informed as possible, breaking down the walls to financial understanding. Check out the other videos on my channel for finance news and money-making ideas you don't want to miss out on. As always, thanks for watching and I'll see you next time. On the market, these exchange. Toma, can you not move? Toma! You're making so much noise. The less we talk, the 1,000. Right? 17.1 thousand. Yeah. I shouldn't be in finance. Toma, can you... Astounding. Is that correct pronunciation? 24...